Hi everyone, Joe Keifer here with Cornerstone Wealth Management. Today we're going in-depth in the newly passed tax legislation approved by Congress. Before we begin, I want to make something clear. We're approaching this bill objectively and not from a political standpoint. Our goal is to explain what is passed, how it works, how it may impact your financial outlook, regardless of where the policy originated. This legislation brings sweeping tax changes, and in this video we'll walk through what passed, what it means for you, and how we're going to help clients plan around it. Let's get started with the first major category, individual and family tax relief. The bill locks in the reduced individual tax bracket from 2017 tax law, which was originally set to expire later this year. For our clients, this means continued access to lower marginal tax brackets, a major benefit for high earners and working families alike. If your income is around $200,000 or more, this change helps reduce the likelihood of being pushed into a higher tax bracket. The state and local tax deduction, also called SALT, cap has been increased from $10,000 to $40,000 for the next 5 years. So if you're in a high state tax or you pay a lot of property taxes, this can be a big opportunity. For example, if you're paying $30,000 in property taxes and state taxes, you'll now be able to deduct that full amount, a significant increase over previous limits.
The standard deduction is now at $31,500 for joint filers. This helps many of our W-2 families and retirees who don't itemize. It simplifies filing while increasing the portion of income that goes untaxed. The child tax credit has now been set permanently at $2,200 per child. This helps young families lower their overall tax liability in a consistent, predictable way. 2 additional deductions were added that we're especially excited about. For our clients in the service industry, like hospitality or restaurants, you'll now benefit from a new tax exemption on tips. Up to $25,000 in tips can now be excluded from federal income taxes for joint filers. There's also a new overtime pay deduction. For clients who are hourly or blue-collar workers, you can now deduct up to $12,500 if single, or $25,000 if filing jointly in overtime pay. This can directly reduce your taxable income if you're working extra hours.
This bill offers major advantages to business owners and investors. Bonus depreciation remains at 100% for qualified asset purchases. That means you can fully deduct the cost of new equipment or property components in the year they're placed in service. For example, if you purchase a $500,000 rental property and perform a cost segregation study, you could deduct $125,000 right away. Section 179 has also been expanded, making it easier for small businesses to write off equipment costs up front. In addition, the 20% qualified business income QBI deduction has now been made permanent. This allows eligible businesses such as LLCs, S-corps, and sole proprietorships to deduct 20% of qualified net income. That's a major planning tool for long-term income efficiency.
To offset the cost of these tax benefits, the bill includes spending cuts to federal programs. Funding like Medicaid, food assistance programs like SNAP and ACA health insurance subsidies will be reduced over time. This could impact clients who are early retirees or those using marketplace plans. In these cases, we're reviewing HSA strategies and employer health benefits to ensure proper coverage. There's also a new 3.5% remittance tax starting in 2026 on funds sent overseas. If you support family members abroad, this is something we'll need to plan around.
So what does this all mean for you? If you're a high income earner, you benefit from lower permanent tax rates, increased SALT deductions, and opportunities for Roth conversions or bonus depreciation strategies. If you're a business owner, the permanence of QBI and bonus depreciation gives you more freedom to reinvest, purchase assets, and optimize your tax position. If you're a working family, higher standard deductions, a stable child tax credit, and new deductions for overtime pay and tips all help reduce your tax burden. Every client situation is different, but the key takeaway is this. This bill opens meaningful planning windows. Many of the benefits begin immediately, and some may be temporary. If you haven't reviewed your plan for 2025 and beyond, this is the time to do so. We're here to help and take full advantage of opportunities available. Thank you for watching, and as always, let's talk through how this may impact your specific financial plan.